Could it be time to buy the TLT ETF? We think it's possible, so let's take a look. Now, before we look at the TLT ETF, which, as a reminder, actually represents bond price, not yield, so it's an inverse relationship. In order to look at TLT, we need to first understand what are 10-year bond yields doing, or at least longer-term bond yields, because that's obviously what is going to then move the price of the TLT ETF. What I'm looking at here, just for simplicity purposes, the 10-year bond yield. I have weekly bars on this, so this is a weekly time frame, and we've started to see that U.S. economic growth has weakened, and we think it's possible that it weakens further and then ultimately picks up, and then we have also the fear of inflationary forces pick back up. So this is more of a multi-week, maybe a multi-month call, probably at least, is sort of my suspicion here. And what you can see, if you look at the 10-year bond yield going back all the way to October 2022, it's essentially moved between, on the very, very low end, if we were to go all the way to the low end, somewhere around 3.3% to as high as essentially 5%. And if you kind of, make this a bit more, if we're a bit more lenient on this and just kind of take the average, I try not to draw lines that are like taking the exact ticks, but you kind of average it out. So this is roughly the low end of the range there, roughly sort of, let's say 3.5, again, maybe a touch lower, which makes the middle of the range more or less where bond yields are right now as I'm recording this. Maybe by the time you watch this, it might be somewhere different, but right now they're somewhere around 4.2% on the 10-year, 4.25, something like that. And so certainly they could bounce from here, but if economic growth just weakens a bit more and people get a bit more concerned, it's very feasible to think that 10-year bond yields go down into, the high threes, 3.8, 3 point whatever, that kind of thing. Don't think they're going to go below 3.6, but again, we'll determine as we go forward. The point is it might break the midpoint of this range it's been in for the past 3 years, or at least 2.5 years, and that would, of course, the inverse relationship to that would be long bond price, which would mean TLT, the ETF, would then have to go up. So if we look at TLT real quick, this is the weekly chart, meaning weekly increments of the TLT ETF. Again, it seems very silly to draw lines here because it's obviously all based on the yield. That's why I want to start with the yield analysis. But if we were to make this a daily chart, just to give people a bit of an idea, we have a 200-period moving average, which is not that relevant. It's the red line for TLT. But I think if we were to break above, 92, 93, maybe then we see some momentum come in. We've already had a pretty big move in bond prices higher. Obviously, bond yields coming from 5% down to the 4.23 area where we are right now. So if we were to see further deterioration in bond yields, then bond prices could certainly start pushing higher, meaning TLT could go higher. I don't think that lasts for very long, though, I'll be honest with you. I think as U.S. economic growth starts to look better and then inflation fears come back maybe a bit more seriously, then I think bond yields will probably go back up to 5%. But again, let's first deal with the sort of the multi-week, maybe, 2-3 month kind of period, and then we'll go from there.